Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AON PLC quarterly report. AON PLC offers a diverse range of services to its clients worldwide. These include commercial risk solutions, retail brokerage, specialty solutions, global risk consulting, captive management, and affinity programs health solutions. Consulting and brokerage, consumer benefit, and talent advisory services, insurance-linked securities, and capital raising services, strategic advice, restructuring, and merger and acquisition services, risk management products and services, including treaty and facultative reinsurance capital market solutions, and corporate finance advisory services, investment advisory services for various plan types, such as defined benefit plans, trusts, and endowments. AON PLC stock price drop. A year of mixed results. AON PLC stock price experienced a significant drop of -6.26% in the past year, primarily due to its first quarter 2025 earnings report missing analyst expectations for both adjusted earnings per share, EPS, and revenue. The company's total operating expenses rose by 25% year-over-year, mainly attributed to higher compensation costs and increased interest expenses from debt incurred to finance the acquisition of NFP. Additionally, AON's interest income declined sharply by 82%, further impacting profitability. Despite strong performances in other earnings reports, including surpassing analyst estimates for EPS and revenue in Q4 2024, Q2 2025, and Q3 2025, the first quarter miss had a lasting impact on the stock price. The substantial increase in operating expenses and decline in interest income were key factors contributing to AON's stock drop. The primary drivers of revenue growth or decline can be identified from the financial summary provided. Revenue growth is primarily driven by the significant increases experienced by various segments, including commercial risk solutions with an 11.1% increase, health solutions with a 20.6% increase, wealth solutions with an 18.7% increase, the human capital segment with a 121.1% increase. In contrast, revenue decline is driven by the slower rate of growth experienced by reinsurance solutions at 4.7%. Additionally, acquisitions and divestitures had a 1% unfavorable impact on revenue growth. Organic revenue growth was also a significant driver, reaching 7% in Q3 2025 and 6% in 9/2025, driven by net new business and strong retention across various segments. Net income and profit margins. A shift in favor of growth. The financial summary reveals a significant increase in net income and improvement in profit margins for the company. In Q3 2025, net income rose by $115 million, 32%, to $470 million compared to the prior year period. For the first 9 months of 2025, net income increased by $60 million, 3%, to $2 billion. Profit margins also saw a notable improvement. The operating margin increased to 20.4% in Q3 2025 from 16.7% in the previous quarter, while the net income margin rose to 11.8% from 9.6%. However, for the first 9 months of 2025, the net income margin decreased slightly to 15.9% from 17.3%. The decrease in effective tax rate from 22.8% to 19.8% contributed significantly to the improvement in profit margins. Additionally, currency fluctuations had an unfavorable impact on net income per diluted share during the 9 months ended September 30, 2025. Overall, the company's financial performance indicates a positive trend, with increasing net income and improved profit margins driven by a decrease in effective tax rate and other factors. The company's financial performance indicates a positive trend in its operating cash flow. The data shows that the company has consistently generated significant amounts of cash from operating activities, with $2.084 million in 2025 and $1.835 million in 2024. Additionally, free cash flow was reported at $1.9 billion for the first 9 months of 2025. Furthermore, net cash provided by operating activities reached $2.1 billion as of September 30, 2025. These figures suggest that the company's operations are generating sufficient cash to meet its debt and other obligations, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes over the past periods. In terms of debt, the total debt has fluctuated between $43.8 billion and $16.8 billion, with a notable decrease of $226 million as of September 30, 2025. The current portion of long-term debt has increased by 79% in some periods, while long-term debt has decreased by 10% in another period. Regarding interest expenses, the company has experienced mixed results. While there have been instances of a 5% decrease and a $7 million decrease from 2024 to 2025, other periods have seen an increase of $42 million in the 9 months ended September 30, 2024. Overall, the interest expense has changed significantly, indicating a volatile trend. In summary, while there are some instances of decreases, the company's debt level and interest expenses have undergone significant changes, with no clear indication of a consistent trend. The financial performance of the company varied across different segments and regions. Notably, commercial risk solutions, reinsurance solutions, and the risk capital segment experienced declines in revenue, with decreases ranging from 3% to 9%. In contrast, health solutions and wealth solutions saw significant increases in revenue, rising by 7–10% year-over-year. The human capital segment also performed well, with a 7–12% increase in revenue and a 64–26% rise in operating income. Overall, the company's performance was mixed, with some segments experiencing growth while others faced declines. Management is accelerating AON United's strategy through growth in risk capital and human capital. They remain focused on strengthening the firm with a united operating model that leverages data and analytics to deliver efficiency and connectivity. Organic revenue growth was 6% in the first 9 months of 2025, driven by core health and benefits strength globally. Management is prioritizing long-term investments despite increased expenses. The company expects adjusted operating income increases due to organic revenue growth and cost management. Revenue growth is driven by health solutions, 6%, and wealth solutions, 5%, but partially offset by increased expenses. AON has a share repurchase program authorized by the board of directors, which has been increased several times since its inception in 2012. Management does not anticipate a material impact from the One Big Beautiful Bill Act on their global effective tax rate, results of operations, cash flows, or financial condition in 2025 and future periods. The company has made significant moves through acquisitions and divestitures. Notably, it acquired NFP, a notable transaction. On the other hand, the company has also engaged in strategic divestitures, including the sale of businesses and certain assets and liabilities in the prior year period. These transactions demonstrate the company's efforts to optimize its portfolio and focus on core operations. The company's financial summary reveals that it has a history of rewarding its shareholders through 2 key methods. Firstly, the company has paid dividends to its investors on multiple occasions, as documented on pages 14, 54, and 61. This indicates a commitment to returning value to its shareholders in the form of cash distributions. In addition to paying dividends, the company has also engaged in share buybacks, as noted on page 59. This strategy allows the company to reduce its outstanding share count, potentially boosting earnings per share and increasing shareholder value. By combining these 2 approaches, the company demonstrates a proactive approach to managing its capital and rewarding its investors. That concludes the financial summary for AON PLC. Feel free to comment below, and I will be happy to answer them when possible.